Hello. Welcome to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. This has been a quiet week for Bitcoin. Price is ranging around 60K. We'll look at the price chart together. And there's been a little bit of profit taking on chain by older hands that we'll walk through together. We'll talk about its impact on the market and what we think it means going forward. If you find this content valuable, make sure you give my video a thumbs up and be sure to subscribe. I appreciate all the support you've given me so far, and this community is just getting started. We still have much more to go. With all that said, let's get right into it. We'll start out here with the price chart. So we've been ranging around 60,000 for weeks now. It's been about 3 weeks since the break of the all-time high, and we continue to hang out in the same area. There aren't a lot of observations to make about what the price chart is doing here, except the fact that it's holding steady. It isn't rolling over. And while I'll show you in a moment, there's been a bit of spending on chain, the price itself is holding up. So if we're going to take an observation from the price chart in conjunction with the on-chain data, it's that we're just ranging and gathering support at the time. No real new observations here. But one thing I will point out about the price chart, if we flip over here to the daily, this yellow fractal is the 2017 all-time high breakout. And you can see that we did break over the all-time high in 2017 before it was rejected. And this whole process took about 50 days. Well, we're about 20-something days into this process now. So just keep in mind that all-time high breakouts can be messy for Bitcoin. They're not always a clean snap into new prices without looking back. And while this fractal doesn't resemble the current price action, it's a good idea to keep in mind what happens at all-time high breakouts. It's important to remember that sometimes disagreements over price may keep us in that area for a period of time, and that's okay. On-chain is where our real focus is, so we'll just hop right over there and not waste any time. This is our lifespan metrics dashboard. At the top, we have spent output age bands on the left and spent volume age bands on the right. A spent output contains any amount of BTC within it. And when a transaction takes place, you are spending outputs. You can think of them like the bills of cash in your wallet of different denominations. And when you take part in a transaction, you spend, the protocol decides for you which of those outputs in your address gets spent, which of those bills of cash gets spent, and each of those has an age, but they're all counted singularly on the spent output age bands. Each one of them counts as one output. The volume of Bitcoin within those spent outputs is shown on the right here in the spent volume age bands. So we have the number of spending outputs on the left and the volume of BTC in those outputs on the right. Younger coins, younger spent coins are in brighter colors at the tops of this chart, and in the lower colors, the darker colors, those are older spent outputs. Those are older coins being spent each day. And what we look for on this chart are bursts of dark colors, which signify older coins being brought to life. What we've seen here in October, as price has been rising and we hit the all-time high breakout, we've seen an increase down here at the bottom of this chart in older coins being spent. The volume of them is increasing slightly. If you see over here on this left axis, this is the percentage of daily volume taken up by these age groups. Some of these days here at the end of October saw 15 to 20% of daily volume taken up by coins that are 6 months or older. It happened on a couple of instances around here. And when I point out that older coins are being spent, some folks may take that as a sign of alarm, as a sign of caution that we have old coins being spent. But it doesn't tell the whole story. What's important to look at is the context of price in relation to that spending. And though we have seen recently some older coins being spent, you can see it on the heat map here, price has remained sideways. The market has absorbed that sell pressure. That's the real takeaway here. If we were seeing older coins being spent and price was rolling over, that would be telling a different story from what this is showing, which is that sideways price with slightly more older coins being spent is showing that there is a demand volume there absorbing that supply. Scroll down here a bit. We've got a few other perspectives of the lifespan of these coins being spent, and we'll just kind of touch on them all here. On the left, we've got 90-day coin days destroyed. In a few different videos, we've looked at this chart and commented on how remarkably, historically low the value on this chart is. So coin days destroyed is the amount of coin volume each day in total that is being spent on chain. The longer that a coin sits dormant, the more days it accrues, and when that coin is spent, all of those days are destroyed. And so when we see spikes in coin days destroyed, it's telling us that a lot of coins with a lot of days accrued to them are being spent at once. And that usually happens in bull runs and in big capitulation moments for markets. We've noted in a couple of the previous videos, I'll leave a link to one in the description, that this value of coin days destroyed 90 is historically low. So on the one hand, we're seeing a very low amount of coin activity generally across the network. We carry our eyes to this middle chart. This is the spent output lifespan, ASOL. So the average spent output lifespan is the average age of each one of these outputs up here on the top, which if you recall, ignore volume. These are just singular bills of cash being spent in transactions. They could be very small or very large, but they have an age to them. And that shows up on the average spent output lifespan chart here. And we can see in the earlier part of the year, in late 2020, early 2021, this value is spiking as we saw older coins being spent on average each day into market strength. Then it cooled off, started to decline really as the market was rounding in the spring, and then it precipitously fell off in the summer when we hit our little mini bear period. We've now seen ASOL, the average age of spent outputs, increasing in recent days and spiking at the all-time high breakout. So we are seeing a bit more average age of coins moving each day. It's a small increase, but a steady one. However, contextually, recall that price has remained sideways during this period. As older coins are being spent, price actually was rising, and we've been seeing it hold this level despite older coins being moved. So I want to keep that point crystallized as we look through these charts. Dormancy, similarly to average spent output lifespan, is the average age per unit of BTC being moved. So where the ASOL metric is just an average of these bills of cash, so to speak, that are being spent each day, dormancy is also including the volume of those coins moving. So what tends to happen is that ASOL reacts sooner than dormancy in low volume environments, because dormancy tends to be affected by the amount of volume that's taking place, the amount of volume changing hands. So if you have a low volume environment with older coins being spent, dormancy doesn't necessarily register that right away. ASOL would. So we look at these in conjunction because they are two sides of the same kind of coin. They're both showing us the average age of transactions, one with volume, one without volume. Dormancy is also increasing, although it still remains at a pretty low value compared to where ASOL is. So the story that these two metrics are telling, in conjunction with these slightly raised darker colors on the heat map of the spent volume age bands, what the story is telling us here is that we're seeing a bit more older coin activity, but it remains slightly muted. It's not a full-on bull market rage of selling, and what selling is there is being absorbed by the market and prices going sideways. This kind of environment can sustain for a period of time. We could stay here for a few weeks. As long as there aren't massive sellers flooding the market, which we haven't seen, there's nothing to stop us from ranging in these values for a while until a real direction is established. Now we'll check in with long-term holders. This is the group that we like to look at the most frequently to get an idea of where the market cycle currently sits. We've spoken at length on this channel that long-term holders accumulate in bear markets and they begin to sell when price breaks the previous all-time high. This is a consistent behavior over years of Bitcoin's history. Up here on the top left is the supply held by long-term holders. We can see it has started to roll over a bit here in the early stages of November. There's been a slight decrease in long-term holder supply. This is on par with our expectations, and you can see the reduction of long-term holder supply has manifested itself in an increase in short-term holder supply. These two tend to be symbiotic. Long-term holders put some coins up for sale, short-term holders buy them. Many of these coins ultimately get held and mature back into this group a few months later. So we are seeing some distribution out of the long-term holder group. And if we look at the net position change metric, now this is a rolling 30-day representation of the change of this supply line at the top here. So it's like a rolling 30-day average. And because this value has been in relatively the same place since the beginning of October, here we are a month ago, because this has remained relatively flat, the 30-day rolling change of long-term holder supply is now flat. And if you zoom in here, it has registered the first red candle since April. Zoom in even more. Look at these. These two little red candles, they're barely red. Tiny little red candles. But in the grand scheme of things, this is showing us how the trend of long-term holder supply was growing steadily, month over month, maintaining positive inflows. And just recently, because of the flattening in the last 30 days, this green line has started to descend back down to even. So when there's a value of even here on net position change, it means that over 30 days, this value hasn't changed much. And that's why this isn't a big red candle down, because there's not a lot of selling coming out of here. They've just kind of leveled off. So we'll keep an eye on this. Let me zoom in a little better here. We'll keep an eye on this in the coming days. I imagine we'll start seeing a few more little red candles here, and that's okay. The important thing is, how is the market responding to the sell pressure? It's all contextual. If we look at the spent profit ratio of these long-term holders, so this is what level of profit are the coins actually being spent out of this group? What is their level of profit at that time? In the bull run, the SOPR metric for long-term holders stayed in a really tight range as it was increasing. You see that? You see how even though it's kind of bouncing around, it stays in a tight range. And then as we've kind of pulled back this year and been looking for support and just going through this whole kind of bear cycle in the summer and coming back up to the all-time high, long-term holder SOPR has started to range quite a bit. This is occurring because the long-term holder group has a broader and broader cost basis. So as we've been running up here in price, many of the older holders, now their cost basis is down in the 4 digits. You know, there's people with a cost basis of $1,000, $4,000, $8,000. And as we get up here into the prices of 10K, 20K, 30K, and time goes on, and long-term holders start becoming these people here, these folks who bought at the higher prices, their cost basis is higher. And so as a group, you get a broader range of cost bases. And that's why we start seeing more of a variety of values in their spent profit ratio. We've got people spending who bought up here, and so their cost basis is very close to break even, which is this black line. So when they spend coins, when anyone here is spending, maybe they've been waiting for price to come back up to their cost basis. They've been waiting for 7 months, 8 months. And now that it's back up there, they're spending and getting out, and they're pulling this value down close to the break even black line. Then you've got other long-term holders with coins that are 2 or 3 years old who are spending. They're the people showing up on the spent volume age bands in these darker colors here. The percentages you're seeing of 3-year and 5-year and 2-year coins being spent. Those folks have a much lower cost basis. And so the few of them that are spending coins are getting a profit ratio of much higher values. And so they're pulling the line back up. So what we're getting is a broader range of long-term holder spending. This is healthy. We've seen that this value pulled back and actually caught a bounce here in September off of the break-even line, which is what we call a SOPR reset. Profitability was trailing down, and before losses began realizing, buyers stepped in and pushed the price back up, and spenders remained in profit. We're visualizing market psychology here in this line of our long-term holders. And so far, their profit taking seems to be what we would expect. I don't see any real red flags here. And price has absorbed this sell pressure. Again, that is the key point. One other thing I wanted to point out here is how differently the long-term holders are sitting right now compared to earlier this year at the same prices. Okay, so on this right chart is the MV/RV of long-term holders. This is the ratio of the market cap to their cost basis. So when the value is high, long-term holders as a group are sitting in a very high level of unrealized profit. Their coins are heavily in the green. And when we were up breaking 60K and we were creating the first highs of the year back here, the MVRV for long-term holders was near 10, which means that as a group, they were at 1,000% profit. That creates a very top-heavy market environment, and it creates an outsized risk of profit taking. The market is running on empty, so to speak. There's such a high level of profit that it doesn't seem like a quality entry, and so you tend to get more sell pressure once you start reaching those levels. So MVRV was up near 9 or 10 earlier this year. And then as long-term holders began absorbing buyers with higher cost bases, their MVRV began lowering. And now, if you look at this value here, what this is representing is that the cost basis of long-term holders has actually risen. The price itself, the market cap of Bitcoin, is in the same place it was at in April, but the MVRV of long-term holders is 1/3 of what it used to be, which means that their cost basis has essentially tripled since we were at the highs earlier this year. The long-term holders have absorbed a lot of buyers with higher priced coins than what they used to have. And this group itself has shuffled around the supply enough that they now have a much healthier cost basis for the next leg of this market. We do not want to enter a bull run with all of the long-term holders being at 10x profit. That's not a healthy place for us to begin a proper bull run. But here we are with long-term holders with an average profit ratio of 3.5, literally 1/3 of where we were earlier this year. A much healthier place for the market. And this, friends, is one of the key takeaways that I want you to have for this video today. I'll actually show you this in a second chart. This is the cost basis of long-term holders. So we were just looking at the MVRV, which is this blue line here. And this was the ratio of their cost basis to the market cap, right? And you can see that earlier this year and at the end of 2020, as we were creating this bull run, the cost basis of long-term holders was way down here below 6,000. That meant that this group as a whole had a cost basis under 6K. So we ripped up to 40K, ripped up to 60K, and these folks were in heavy profit. Some of them sold, there was some distribution and some coins changing hands. And then as time went on, as these coins began maturing, these coins with higher cost bases, they began maturing and graduating into long-term holder supply, crossing that 155-day threshold that we use to determine whether a coin is long-term held or not. As that happened and more higher-priced coins became long-term supply coins, the cost basis of long-term holders began to rise and now is about 17,500, 17,750. That's their cost basis now, as price sits at 63,000. Well, when price was at 63,000 in April, long-term holder cost basis was at 5,800. So the potential sell pressure, the potential profit-taking pressure of the market in April was 3x what we are now. That is an important observation. And it's one of the reasons why I feel very confident that this next leg has a lot of potential. I don't know what the top looks like. I'm not going to try to call a top for you because I don't want to focus on price. I want to focus on the on-chain supply and demand dynamics that truly tell us what the market is doing. The last place we'll check in today is the futures market, namely the perpetual market, where the funding rate governs the premium fees that traders pay to have their positions open. Futures open interest, which is the value of all open contracts, stays very high. It was increasing through October, and in the last few days has kind of held a baseline as price has held a baseline. But the funding rate is really what we like to look at, right? So let's make this a 1-week chart. Funding has been elevated quite a bit for the last couple of months. In fact, let me take this back out. You can see it's been spiking quite a lot in the last few weeks since we got to the all-time high, broke it, and have gone sideways. Funding is kind of chopping around a lot. Just in the last few days, we've had a couple more divergences between the funding rate and price. I'll leave a link in the description to a previous video where I walked through how we interpret the funding rate and the price together, how those divergences can lead to liquidations, and that entire mechanism is important to understand if you want to have a deeper understanding of the Bitcoin market. So I highly encourage you to check that out. In the last couple of days, there's been some more liquidations. Here on the 3rd, we can see that funding spiked to over 0.04% as price was staying sideways. So these are leveraged long traders opening positions, expecting price to go up. But price held sideways, actually started to show some weakness and broke down. And here in this moment are some long liquidations. So this chart here is showing long traders who had their positions automatically closed by the exchange because their margin costs exceeded their balance. They got too over levered, the price went against them too hard, and they didn't have any money left to cover their costs. The exchange closes them out. And here you can see on November 3rd around midday, just as we reached this point where price was breaking down, these are where the liquidations came in from the previous spike in funding rate, from the long traders stepping in here thinking they were catching an opportunity. Down here, just after these liquidations occurred, the same thing happened. We had a rise in the funding rate as price was showing weakness, and a few more people got liquidated. Are you starting to see this relationship here? Once you see it, it jumps out at you, and you can see it, you can catch it every time. Funding rising, price sideways and weak. Ultimately, it reaches a point where someone gets liquidated. Same thing here. Funding rising, price actually going down, reaches a breaking point, someone gets liquidated. This is going to happen forever, for all time. As long as there is a futures market, these things will occur. The good news is that the futures market now is in a much healthier place than it was earlier in the year when exchanges were offering 50x, 100x, 125x leverage. Now 20x is about the most you can find anywhere. So that is helping futures to be a little more stable. Another thing helping futures to be stable is this line right here. This is the percent of futures contracts that are margined with crypto. So there are two ways that you can margin your futures contract. You can use crypto, which usually is Bitcoin, or you can use cash or cash equivalents like a stable coin. When you margin with a stable coin, your collateral is pegged to the US dollar and its value does not change with the market. It's a very stable collateral asset. When you margin with crypto, when you margin with Bitcoin, your hedge and your futures position are based on the same asset. And if price is going against you, your position is losing and your hedge is losing value if you're a long trader. So what happens is you have volatility compounded with volatility. It makes liquidations much more likely. It makes your personal floor as a trader of what your stop is much higher. And when you compound a lot of traders using crypto margin together, you get a recipe for just a cesspool of volatility. And that's what we had earlier this year. When a lot of this chop in the spring, we had people with 50x, 75x, 100x leverage just cranking up and getting wiped out numerous times. But you can see on this value, so earlier in the spring, we had 65, 70% of all futures contracts were margined with Bitcoin, which is that volatility compounding on volatility we were just talking about. But after the spring, a lot of the exchanges kind of realized that they were contributing to instability and they reduced their leverage offerings. And we've seen over the last few months a continuous decline in the amount of contracts that are opened with crypto margin. And now we're at a baseline of below 50%. So less than half of all futures contracts now have crypto margin, which means the quality of the margin currently available is much better. It's much more robust, more stable, and we get less of the cascading liquidations that we were seeing earlier this year. They may still occur, but the likelihood is far less. So just to kind of bring everything together, the futures market continues to play a role. We're seeing these moments where the funding rate is increasing as price is going sideways and showing weakness, and a few people are still getting liquidated. This is just our reality now with the futures market. Conversely, long-term holders have begun to distribute a small amount of coins. We can see there is a bit of profit taking of a variety of ages, and generally their profit level, their realized price, is in a much healthier place than it was earlier this year. It's about 3 times higher, which gives us a better floor to begin the next stage of the bull run, in my opinion. We are seeing a few coins being spent, slight upticks in the lifespan of moving coins. But as long as price continues to hold up and go sideways, the market has a demand volume there that is absorbing the sell pressure. These are the dynamics we look for. Right now, it seems healthy. This all continues to look very strong. Our bull thesis remains fully intact. And so far, the market has absorbed whatever sellers have come to life. That is what I wanted to talk about today. We're seeing some spending on chain, but it's still very light and the market has absorbed it. Futures is playing a role as it always does. We're not seeing outsized activity there that would give us immediate concerns. With today being a Friday, I expect the next couple of days could be on the quieter side, as they usually are. Folks tend to get nervous when price goes sideways, but number cannot always go up, and this kind of price action can be very healthy for prolonged bull runs. We need to give buyers opportunities to get back in. We need to give profit taking a chance to play out, and all of that is happening right now. This is very healthy. Make sure you're following me on Twitter at TXMC Trades. I post a ton of analysis on there. As many of you realize, you can interact with me on there. I try to answer as many questions as I can. And you know, we'll keep learning. We'll keep looking at the charts together, observing Bitcoin, trying to keep our finger on the pulse. And when something starts to look divergent from our thesis, we will talk about it in earnest. I hope you all have a great weekend. I'll try to put a video out on Monday or Tuesday so we can see what happened over the weekend. We'll speak again very soon. Take care of yourselves, friends. Cheers.